Good day, everyone. Allow me to introduce myself in a few words. My name is Thomas Grangeard. I come from France. I've been living in China for 12 years now. I came initially to complete my studies in economics and management at the University of International Business and Economics in Beijing. Once I graduated, I started an internship at Mazars in the financial audit department. After 6 months, I was hired as a member of the accounting and outsourcing services team. I have since been working in this service. I focus primarily on advising foreign investors with their operations in China, whether they have a direct presence via a company or representative office, or without any legal presence at all. About 65% of our customers are European. The rest are American or Asian, Singapore, Hong Kong, Japan, and so on. Our team focuses mainly on outsourced accounting and tax compliance, payroll, and company secretarial services. Today, I'm going to be talking about closing procedures for a company incorporated in China, with a focus on the common issues that foreign investors may face. I would like to take a moment to introduce the various exit options that are available to investors. As you can see, there are mainly 3 exit options for companies in China. The voluntary closure, which is initiated by the investor or the investors. This will be the focus of the presentation today. The compulsory dissolution, which is basically referring to the revocation of the business license by the administration. And of course, bankruptcy, which is applied for either by the legal representative of the company or its creditors. The People's Court, that's the Court of Justice, handles the process. There are several reasons an investor can invoke to apply for voluntary closure. One of them is a poor performance with serious losses. Of course, financial statements should demonstrate these losses. Another reason can be heavy losses following a force majeure, for instance, flooding or fire, which cause severe damage to the company's assets. In the case of a joint venture, the failure of the company to fulfill its obligations as prescribed in the joint venture agreement can also be one of the reasons invoked. And there are, of course, other reasons as prescribed in the Articles of Association. Now, I'm seizing this opportunity to offer a piece of advice. Have the Articles of Association of the company drafted, or at the very least, reviewed by legal counsel to make sure that, 1, provisions are in line with Chinese law, and 2, it provides for such exit options if necessary. The Articles of Association can, of course, be amended throughout the life of the company. The compulsory dissolution can be imposed by the administration under the following circumstances. 1, if false or misleading information was provided to the administration when incorporating the company, in particular on the intended activities carried out by the company. As you know, in China, when incorporating a company, you're required to precisely indicate what your intentions are in terms of business activities, and the business license that is issued by the administration specifically words the activities that the company can carry out. Now, if at any point of time the information provided to the administration when incorporating the company was misleading or false, because not in line with what you intended to do, then this can be a reason for the administration to revoke the business license. Another reason can be if the company engaged in activities that are not included in the business scope for which it is registered. So this is what I just mentioned. Again, this is clearly stated on the business license, so if you're not certain of what the company can or cannot do, you can refer to the business license, to the section specifically on the business scope. If the company failed to its annual declarative obligations. So these are mostly the annual inspections. So these are annual declarations that the company, and in particular foreign invested companies, need to do every year, usually between the month of April and the month of June. So failing to do these can be a reason for the administration to cancel the business license. Another reason can be if the company made an illegal use of its business license. So I don't have too many examples in mind. The one that comes is renting the business license to another business so that this company can carry out activities that were restricted by its own business license. A note of importance here: certain investors may be tempted at times to let the company fail on its declarative obligations, after winding down operations, of course, in order to voluntarily provoke a revocation of the business license, thus liberating themselves from a long, complex, and costly liquidation. This comes with risks because the administration will automatically blacklist the legal representative and the investor when revoking the business license. Now, being blacklisted basically limits the investor and the legal representative from engaging in any other operations in China in the future. Depending on the gravity of the situation, the measure can range from 3 years to an unlimited period of time. So I clearly do not recommend going this way unless you are certain you will never be doing business in China in the future. Bankruptcy is a procedure initiated by the legal representative or the creditors of the company. Now, if the company is already in the process of a voluntary closing and the liquidation committee realizes that the assets are insufficient to settle the debt in its entirety, then it can also file for bankruptcy. The following proof will have to be presented. So first situation, the assets are insufficient to pay off the debt. This is known as a balance sheet insolvency. Or, different situation, the debt cannot be settled when due, also known as cash flow insolvency. A note on bankruptcy here, caution, because once the investor is engaged in a procedure of bankruptcy, the court is basically in full control of the process, and this includes the timetable. And in China, like in many other jurisdictions, bankruptcy can be very lengthy procedures. So if you intend to remain in control of the closing procedure, my suggestion is try to avoid this. It may imply for the investor to invest a little bit more money on the company so that it can pay off all of its debt, but it can be also saving a lot of time and costs. Now let's take a look at the first steps to be taken before launching a voluntary closing procedure. First, and probably the most sensitive one, is employees. The company needs to terminate labor contracts. This may have to be done in steps as certain functions, notably management functions or administrative functions, may be needed along the early stages of the process. My recommendation here is first to plan for this carefully. Put in place the right team to do the job. Ideally, legal counsel specialized in labor law so that they can tell you what to do and what not to do when talking to employees about termination. A payroll or a tax specialist to simulate the various termination packages that will be discussed with the employees. Allow enough time to prepare the termination packages. Now, I will come back to this a little later, but basically this can be an important moment before you discuss with the employees to make sure that you have the right packages to offer to your employees, that you're neither too low, which might put certain employees in a defensive position, neither too high because you want to avoid over exceeding your budget. You may also want to put in place a communication strategy. You may want to do here the announcement at the same time for everyone in a neutral position, in a neutral location, before proceeding to the individual discussions. Another recommendation would be to allow enough time, especially for negotiation with the employees. I cannot emphasize on this enough because this is a blocking point in many cases I've seen. Employees must accept the conditions you're offering them. The company, of course, can resort to alternatives, but these are time-consuming and costly. So anticipate blockers and anticipate issues and prepare in advance for these. Now, I mentioned anticipating blockers. Here, what comes to mind is certain employees will seize this opportunity of termination talks to put back on the table all conflicts or bitterness about the remuneration or their work conditions. So think of these in advance. Certain employees may also take a role of leaders among the group, leading the contestation. So you may want to identify these individuals early so that in the order of the individual discussions that you will conduct, you may want to put these individuals at the very beginning. Now, these seem like little things, but they can constitute potential headaches when conducting the discussions. My suggestion here on identifying the potential blocking individuals is to involve the general manager or the local HR manager who know the employees and who can provide valuable insight when drawing the strategy. Second, review each case individually. Now, you may have certain cases which will have to be treated as special cases with a special treatment. That notably includes, of course, pregnant employees, employees in the lactation period. So what is called lactation period in China is the 12-month following the delivery of the baby. And employees who are the sole provider of the family, so usually single parent with a child younger than 16. So you may want to identify these individuals early enough so that, again, you can have a reassuring discussion with them and, as we will see later on, adapt the termination package that you wish to propose to them. 3, inform the labor bureau and the trade union, if any, before announcing to employees. So this is the step right before the announcement to the company's employees. After you've come up with the termination packages and with the whole communication strategy. Number 4 is maintain confidentiality as long as possible, keeping the circle of those in the known as limited as possible. Termination package. Before we proceed with this section on the termination package, I wish to emphasize that a compensation is the result of a negotiation between the employer and the employees. So the following is only indicative. It presents one of the many practices noted in the market, but this serves generally as the point of reference for many termination packages. So here's an illustration of how to compute it. First, and this may already be available in your HR database, list the employees indicating for each the years worked in the company, the current monthly gross salary, including all the allowances, so that's a meal allowance, a phone allowance, taxi allowance, per diem, etc. Then identify the average monthly gross salary over the past 12-month period. So you need to take the last 12 months, sum all the salary of that period, and then draw an average over these. Again, you need to include the allowances and the bonuses. That's the annual bonus, the spot bonuses, the commissions, etc. And here again, you want to identify the special cases as mentioned earlier. So once you've got this information, you're basically going to be multiplying the years worked by the individual in the company by the average salary. Now, the average salary is usually capped at 3 times the average salary in the city of employment, as published by the municipal authorities. This is the basis used when you're computing monthly social contributions for them. This average is revised annually, usually in June. So in this case, I've circled in red the average salary cap in Beijing since June 1st of this year. That's the 23,119 RMB. So you're multiplying the years worked by the average salary and by a factor of 2 for employees that are pregnant or in the lactating period. And in column D, that gives you the gross compensation for the employee. Okay, so here the 23,119, that's the 3 times cap average salary in Beijing since June 1st of this year. Again, a reminder, this is just an indication, and of course the packages that are negotiated and signed off with employees in the end may differ a little bit as these. But this is a good point of reference to start the discussions. Now, the termination package is of course liable to individual income tax, but it's only taxable if it exceeds 3 times the annual average salary of the city. Annual average salary of the city. So in our case, Beijing again, in June or July 2017, the threshold is 277,000 RMB. So basically, in the example used before, as you can see in the column D, none of them reached that threshold. So all of the proposed compensation are tax-free. So, as I said, this is merely a reference, and terminations are negotiated with employees. Now, if you wish to facilitate the discussions and speed up the process, you may want to consider offering a little bit more. Now, generally, what we see is that some companies decide to offer, in addition, either a 1-month bonus, a fast signing bonus. So the idea behind a fast signing bonus is to set a deadline for employees to sign rapidly the termination agreement. So basically, when you present the termination package, the company will offer an additional bonus if the employee signs off on the agreement before a fixed date. Beyond that date, the bonus no longer applies. This is an incentive often used to accelerate discussions. What we can also see from time to time is the annual bonus prorated to the month worked. So, for instance, if you usually pay the bonus in January, end of January of the year, and you do the announcement in June, you may want to prorate the 5-month worked in 2017 for the 2017 annual bonus. Now, in certain cases, for pregnant or lactating employees, some companies may offer, as an alternative to the termination package I mentioned before, to pay the salary of the employee for the duration of the pregnancy or lactating period. In certain cases, this may be more interesting to the employee, actually, than the termination package as calculated in the previous page. So this is one of the little simulation you may want to be doing with your payroll specialist when preparing the termination packages. Now, before proceeding to the final settlement of the agreed compensation package, please remember to clear all payables and receivables with employees. to collect or to hand over the information held by the employees. So that's the contact details of suppliers, of customers. In the case of the administrative functions, the contact details of the tax authorities or the social contribution center, etc. The passwords, of course, again, password to access to the office or to unlock the computer, or again, in the case of administrative functions, the password used to log in when doing declarative obligations. Hand over as well the company assets, computer, phones, tablets, keys, access cards, and so on. My suggestion, and I think this is very important, is to formalize this. So formalize the termination agreement. Make sure that the employee signs off on this before you do the final settlement. And also the handover of information and assets. Because later on in the process, if you realize that some things are missing and you go back to the employee after the settlement has been paid, the chances of getting a reply are thin. Now, after the employment termination, the company is required to notify a number of administrations. First, and most importantly, is the social contributions and the housing fund centers. So these are the administrations that are basically dealing with the social security of the employees. So you want to inform them as soon as the termination agreement is signed to make sure that the employees are terminated in these administration and you're not required to pay any more social contributions more than you should. Now be aware, in certain cases, some employees will negotiate for their social contributions to be paid off for a month or two after the termination. That allows them sometimes to find a new job and not to interrupt the contributions. It's something that they consider important, notably for their pension. So you may want to take this into consideration also when communicating to the administration. Now, in the case of foreign employees, you are also required to approach the Labor Bureau to cancel the working permit. So this is an employer obligation because the working permit is basically a company-held document. You're also required to inform the Public Security Bureau, so that's the administration that issued the residence permit, that's the visa that's on the employee's visa page in the passport. Here, the company is only required to inform the administration. The employee is the one responsible for going to the administration and doing the appropriate procedures to cancel or renew its visa, depending on what the employee will be doing next after the termination. Now, coming to creditors, before launching the administrative procedures to close the company, you need to make sure that you are clearing all outstanding debts. So here my recommendation is, once again, to involve the finance team, in this case the accounting team, to summarize all the payables due. You also want to involve the treasury team so that they can prepare a payment schedule and, if needed, a financing plan. So again, if you're in the situation where you want to go for a voluntary closure, but it looks like the company will not have sufficient assets to pay off its debt, you may want to involve the treasury team to come up with a financing plan with the investor. Then moving along to the more legal aspects of the termination contracts. Here you will want to have a legal advice to identify the termination options for you, and at the same time the treasury team to forecast for the possible compensations and include them in the payment schedule and financing plan. Customers. Now, the announcement to customers is obviously a sensitive topic as well. The company should define a strategy, notably by addressing the following questions. First, ask yourself, do we continue to serve the client? Now, if the answer is yes, then how do you intend to do that? You need to find an alternative model to serve the clients. Here, you may want to involve the commercial team to study the feasibility, and you also want to involve the tax team early enough to assess for potential tax impact on the new model, which may impact the pricing of the proposed approach. And of course, then you need to see how do you communicate this. If the answer to do we continue to serve the client is no, then you need to involve your marketing and communication team to reflect on how this will impact on the group and how do you want to mitigate with the bad publicity. Then, of course, you want to make sure that you collect all outstanding invoices from customers, because at the same time you need to pay off your debt. So here, involve the accounting team to summarize the receivables, involve the collection team to plan for the recovery, and involve the treasury team if financing forecasted costs is an issue. Here again, you need to make sure that the treasury team and the collection team are communicating with each other to make sure that you stay on top of the situation, collecting on one hand and paying out your debt on the other. There's a little problem with the warn sign, so I'll just pop it right away. Sorry about that. Moving on to the assets. Now, the company should, of course, and this may sound a little strange, but believe me when I say that many foreign invested companies in China do not have a efficient inventory process. So you may want to do a complete inventory before you proceed. Once you get the result, you want to share these with the accounting team to make sure that the financial statements are reconciled with the inventory list and that they are correctly valued in the balance sheet. You may then want to assess the market value of the assets that can be sold, and again share this information with the treasury team. And then you may want to involve your accounting team or your tax team to perform the necessary procedures at the tax bureau to sell those assets. The reason here is that the company is most likely not licensed to sell those assets. So in order to issue a tax invoice, fapiao in Chinese, with the adequate description and tax rate, a number of procedures are needed beforehand with the National Tax Bureau. In this instance, it is the National Tax Bureau that will issue for you the tax invoice. Now, moving to the administrative procedures themselves. So, before actually meeting with the administration internally, you do need to do a couple of things, and you need to formalize that. So first, obviously, the shareholder decides to close the company and asks the executive body, so that's the board of directors or the executive director, depending on what you've chosen for the company. The executive body will consent to the dissolution and formalize a decision by appointing and mandating the liquidation committee. The liquidation committee is generally constituted of 2 members, but it can be more. Usually the legal representative of the company and a director of the board of directors. Now, this liquidation committee is basically overseeing the whole liquidation procedures. So from the beginning, the preparation with the employment terminations, the communication to creditors, to customers, the liquidation of assets, and then the whole administrative procedures themselves. So here you see, all in all, 12 steps, which looks like a lot, but believe me, it's shorter than what it used to be a few years back, a year back actually. The reason being that recently the administration has moved from a one certificate per administration to a one certificate for 5 administrations. So that allows you to reduce actually the number of people you're talking to when wanting to close down your company. So the first step will be with the Ministry of Commerce. So this is the government body that approved the project initially and who will need to approve your request for closing down the company. The second step is also an important one. It's with the Administration of Industry and Commerce. Now you'll see you will have to see this administration twice, in step 2 and in step 10. So here again, this is a central administration. It's the one that issues the business license. So they're basically the ones you want to make sure that your papers are in order before going and meet them. Now the first step, the first time you meet with this administration is actually not so complicated in itself. It's basically just registering the liquidation committee once you've received the approval from the Ministry of Commerce in step 1. Once the registration with the IIC is done, you can proceed with step 3 and the publication of the intention to liquidate the company in the newspapers. So here again, it's a public announcement to make sure that all creditors are informed, giving them some time to come up and request for the payment of their debt. Now, step 4 and 5 can actually be done at the same time as the previous steps. It's basically requesting for a auditor, so a CPA and a CTA, Certified Tax Agent, to issue liquidation reports. So one will be issuing the liquidation audit report. They would basically be auditing the financial statements. So it looks very similar to what foreign invested companies do in China at the end of each year. And the other one, the tax agent, will be doing a tax liquidation report. Now here, it's a little bit different from what the company is usually used to. The objective here of the CTA is to look for any potential tax liability that would not have been properly declared before. Now, when first meeting with the auditor and requesting for a quotation, please make sure to request for a potential update of the report. The reason being is these reports are requested by both the local tax bureau in step 7 and the National Tax Bureau in step 8. And since the duration of the procedures between the two can be quite long, the National Tax Bureau can request for an updated report. So you want to make sure that in their quotation, the auditor is thinking of a potential update so that you can save a little bit of cost in there. Now, once you've got those reports ready, you can proceed with the Customs Bureau. Now, this is only required for the companies who are actually registered with this administration, typically the companies that have in their business scope import and export activities. Now, once this is done, you can proceed to step 7 and the local tax bureau. Now, step 7 and step 8 are really the critical stage of the closing procedures. Typically, this is where companies face a lot of difficulties because the purpose of these administrations is really to look back in the past and identify potential unpaid tax liabilities. So these administrations are going to request for a lot of documentation. You need to be ready to provide all of these. And this is typically where a lot of questions are raised. Now, the local tax bureau is in charge of collecting individual income tax and local surcharges. Now, local surcharges are calculated on VAT, so usually that's not a big issue. But on individual income tax, you can expect the tax authorities to request to see the usual information, the payroll, the pay slips for the past 3 years, but also for foreign employees and the legal representative, if he or she is a foreigner, copies of their passport. This is to make sure that the individual income tax was levied in China from the very beginning, and for the whole period they were in China. Now, of course, the administration may also request for the labor contract to identify potential variable remuneration items or potential allowances that would have not been properly declared. Now, once the local tax bureau is done, this usually takes 45 working days. Well, this is the administrative processing time announced at the beginning, but in many cases it's much more than this. But once this is done and you've got the clearance from the local tax bureau, then you can proceed with the National Tax Bureau. The National Tax Bureau is in charge of collecting VAT and corporate income tax. So here you're really at the heart of the whole process. This is where a lot of the difficulties are usually met. When looking at the proper collection of VAT and corporate income tax, the tax authorities will request for accounting records. Now, in the first stages, they can only request for electronic versions of the accounting records, but very quickly and very often they do request for the physical documentation as well. So this is typically where things take a lot of time, because you need to actually bring to the tax bureau the whole documentation and its history, and they need time obviously there to review it. So this is where it takes a lot of time. Now, when looking at VAT, they will obviously be focusing on all the income, making sure that the proper VAT rate was applied, that there were no cut-off issues, that VAT was basically levied at the appropriate time. So they will look at contracts, invoices, and of course the financial statements. When looking at corporate income tax, they will be mainly focusing on expenses and making sure that all non-deductible expenses were appropriately removed when computing for the tax result. Now, the fiscal administration usually focuses on the last 3 years of tax returns, but if they find any abnormalities, then there is no limitation to how far back they can go. Once you get step 7 and 8 done, then you can actually catch a breather, if I can say that, and move on to step 9, which is typically much going more smoothly. That's the deregistration of the company with the State Administration of Foreign Exchange. Again, you have to do these step by step, one after the other. So you can only wait until the deregistration at SAFE is done, so you can proceed with the step 10 with the Administration of Industry and Commerce. Now, step 10 is officially when the company will be closed down, because this is where the company's business license will be cancelled. So after you've got this done, the company does not officially exist anymore, but there are still bank accounts that needs to be closed. So you will need to go to the bank or the banks, if you're banking with different establishments, to do the deregistration with the People's Bank of China, that's the central bank, and the closure of the accounts. Once the accounts are closed, any remaining funds will be transferred back to the investor. The final step is the easiest one, the deregistration of the company with the Public Security Bureau, because you're still holding a certificate, and the destruction of the seals. So that's the company seal, the finance seal, the contract seal, the legal representative seals, etc. Once all of these are done, then you're basically finished. Now, I've indicated, as you may have seen along the way on the right-hand side, the usual time of process. Now, this is purely indicative, of course. So as I said, the administrative time is purely indicative. It does not take into account the time necessary to prepare the documentation that will have to be submitted to the administration. It does not take into account the discussion with the administration, which at the local and national tax bureaus, believe me, will take some time. The required amendment or correction of the documentation submitted based on the remarks and feedback from the administration, and the required time to provide additional documentation. So here again, the local and national tax bureaus will be the administration that require additional documentation. You can be sure of that. And this is why the 45 working days mentioned before is very likely going to be extended. Now, in my experience, the closing procedures usually take 6 to 12 months. Now, this is for a company that does not have any major abnormalities or compliance issues. In certain cases, this can be, of course, a lot longer if there are such abnormalities. Now, I wanted to take a little bit of time to raise a few points of attention that I think are important. The first one, and the most important to my eyes, is the compliance. Now, when closing the company, the administration will seize this opportunity to really conduct a full compliance check on the company. So any abnormality will have to be regularized before continuing to close your work. In almost all cases where procedures are delayed, the cause is compliance. My recommendation here is, before you proceed with the closing procedures, make sure to do an audit or a health check, focusing specifically on tax compliance. So reviewing all the taxes that the company has been paying over the years, individual income tax, VAT, corporate income tax, local surcharges, stamp duty, etc. And look for potential issues in there. So again, individual income tax, the things you want to make sure that was done correctly is that you levied individual income tax, you withheld individual income tax on all remuneration items that are taxable. And this includes a lot of things. It includes the allowances, it includes the bonuses, it includes any remuneration item in kind as well. One point on individual income tax, because it's a little bit different from most European countries. In China, the employer is responsible for the calculation, the declaration, and the payment of the tax on salary and other remuneration items. On corporate income tax, here again, as mentioned before, the purpose of the tax liquidation or audit is to review expenses deductibility before corporate income tax. And yes, it's not uncommon for the National Tax Bureau to carry an additional review on the accounts, even though the CTA issued its report. Yes, a quick note on stamp duty. So it's easily forgotten. It's something that people often forget because the authorities are not very strict on this, but they are when you're closing the company. Stamp duty applies on most contracts the company signs, including the contracts signed with customers and vendors. Now, another piece of advice is, before you proceed with the closing procedures, make sure to do a review on the social compliance. So that's the social contributions. This is a point that can be raised also by the employees when negotiating the termination package. The issue most commonly mentioned is the base used to compute social contributions. So here again, the rule is you take the employee's average salary over the past 12 months, and that includes bonuses, allowances, overtime, and other sources of wages, and really use that base, which is capped at 3 times, as mentioned before, to compute social contributions. Now, very often that base is under-declared because some items are forgotten, allowances, bonuses, overtime. So you may want to identify these early, because your employees are most likely informed of that. They are aware that your social contributions were under-declared. They probably didn't say anything before because that resulted in higher net in their pocket. But they may use this opportunity of the termination discussion to raise that issue and say, oh, by the way, my social contributions have never been paid appropriately. This is how much you owe me. Now, you also want to make sure that the labor contracts are, well, first of all, that they're here, that you've signed them, that they are up to date, and that they were properly executed, that there are no abnormalities that could be used against you. Now, you also want to make sure that the company has done its declarative obligations properly. So that includes notably the annual inspections, the declarations to the Finance Bureau and the Statistics Bureau, and the handicap fund contribution. Now, regularization can have a big impact on closing procedures if needed. Now, regularization is usually requested when you have compliance issues on taxes or social contributions. If you have to do these, then you can be sure that they will be delaying the procedures, because procedures are done consecutively in a specific order, as mentioned before. If one procedure is delayed at one administration, then that has an impact on the overall closing procedures. And there's obviously no solution to make up for lost time. Regularization will also have costs. So for taxes and social contributions, there will be late payment charges calculated at a rate of 0.05% per day. So if you notice an issue that has been dragged on for years and years, this can actually be quite significant. You may also face a fine, which is applied at the discretion of the administration. This is basically if the administration considers that there's been fraud or an unwillingness to declare things appropriately. And of course, service fees if you are resorting to outsourced help to conduct those closing procedures and regularization procedures. Now, another source of delay and cost can be caused by the information registered at administration to be outdated or incorrect. The information registered at administration generally includes the address of the office of the company, the legal representative information, so the name, the ID or passport number, the general manager information, same ID, passport number, the name of the board members or the executive director, investor information also registered with the administration, so the address, the name, the legal representative. These are typically the ones that are forgotten because there can be many changes within large groups, and these are not always registered with the administration in China, so make sure that these are up to date before you proceed. And the bank specimen, because sometimes bank specimen registered with the bank are people's signatures. And of course, people move, people change, so you may want to make sure that these are up to date and you don't need to contact all colleagues that have left the company a long time ago. You also want to make sure that the registration certificates are up to date and that the information is correct. So, certificates need to be renewed on certain occasions. So here again, whenever the company will change its registered capital or its total investment, or it moved from one office to another, these are the instances where certificates need to be updated. And the famous 5-in-1 certificate that I've mentioned before. So that's the simplification where the company used to have 5 certificates with 5 different administration and has moved to a 1 certificate for those 5 administrations. Now, the 5-in-1 certificate reform needs to be complete before the end of 2017, so make sure that your team on the ground is aware of this and has a plan to do this before the end of this year. Now, before announcing the decision to close the company to employees, and in particular to the administrative team and the management team, you need to make sure that you're securing a number of items that are essential to the company. That includes, of course, the business license and the registration certificates. It includes also the seals that I've mentioned before that will need to be destroyed at the very end. That's the company seal, finance seal, the name seal, or also known as the legal representative seal, the invoice seal, the customs seal, the contract seal. Make sure you have all of these and you know where they are, you've located them, and you've secured them before you move along, because a number of forms you will submit when closing down the company will need to be stamped with those seals. Make sure that you collect the e-banking tokens and that you have the username and the password. Make sure that you hand over the checkbooks, that's the payment check or the cash check. Make sure that you locate and again secure the tax invoice machine. So that's the machine that allows you to issue FAPIAs to your customers. Make sure that you're also securing unused tax invoices, because all of these items will have to be returned to the National Tax Bureau when you liquidate at the administration. The U-keys. So U-keys are those little tokens that basically are used to file tax returns, and make sure that you also get the username and the password for these. Another very important point is making sure that you are securing the accounting records, the audit reports of the previous years, and the capital verification reports. So this is no longer required for newly established companies, but if you have a company that was established more than 3 years ago, then most likely you have these reports somewhere. Make sure that you still have them, because this can be requested by the State Administration of Foreign Exchange and the bank when you're closing the accounts. Now, in conclusion, as you can see, closing a company is a project in itself. Because of the heavier control of the administration in China, such projects are generally more complex and time-consuming and costly than in other jurisdictions. So if you have businesses in Hong Kong, Singapore, and you have done this process over there in the past, expect for much more complications in China, in mainland China, because the administrative burden here is much heavier. Now, as I said, preparation is key to a successful liquidation, so make sure before you launch those procedures that you audit the company to identify potential compliance issues. Make sure that you have enough time to plan the termination of employees and that you forecast the financial costs. Now, in case the audit of the company were to point out to serious compliance issues and the regularization cost is considered as too high, you may want to consider as an alternative winding down the company, putting it in a dormant state, and during that period of time of dormant state, of course, do your declarative obligations properly. And after a certain amount of time, so 3 years usually, as I mentioned, this is the period of time the authorities usually look at, of a dormant state, then proceed with the closing of the company. That, of course, does not exclude the risk that the administration will still look beyond the 3 years of dormant state and identify the abnormalities and proceed with the regularization. but it reduces the risk. So one point of consideration here. In conclusion, also be ready to put in cash to finance the project if you want to stay in control of the closing procedures, because again, if you slide to the bankruptcy, you basically lose control of the whole procedure, and you depend really on the responsiveness of the Court of Justice to conclude the closing process. Assign a dedicated team to coordinate the project. So here again, I think that having people from the legal side to make sure that the employee termination is done smoothly, that the termination of ongoing contracts with vendors and customers is done properly. You really want to have your legal counsel next to you to make sure that there are no loopholes and you can do things correctly at a minimum costs. You also want to involve your finance team, so the accountants, the internal control team, the treasury team, to oversee the whole project. Get the right counsel on the ground if you do not have these people already here, because again, China is very specific, so there are many things that you won't be able to control from overseas. So typically, if your legal advisor is not really aware of the special conditions in China, you may want to have a local advisor to assist you and give you tips here and there on how things are usually done here. And then, of course, the last piece of advice, because this is also my job, make sure that you close the company completely and properly, that you leave no unresolved issues behind you, because if in the future you want to do business in China again, whether directly or indirectly, you will need to make sure that you're not blacklisted by the administration and that you haven't left a bad image of yourself here with the administration. That's it for me today. Thank you very much for listening, and of course, if you have any questions, please don't hesitate to send them. Thank you.